Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And all I got to say is he's back. We had Jan on the show probably a month ago or so. It was amazing talking about mobile homes, seller financing, and moving into bigger and bigger commercial properties. So you knew we had to have him back. We made it work today. How you doing, buddy?
Doing great, man. How are you?
I'm doing well. So I think the first topic we got to kind of talk about today is kind of how our third video ended last time. And that is the move into commercial, right? You're looking at doing office and bigger things. And I look at that market. I've been looking at it probably for 15 years or so. And lots of stuff is changing, right? Lots of people want to talk about the 30-year rate, hurting the housing market, right? Residential. But man, lending in the commercial market, gotten a lot more expensive. So what are you seeing going on?
What I'm seeing, what I'm feeling are pain. Honestly, I've had, unfortunately, $5 million under contract fall apart in the past month, actually. Two big, beautiful projects that worked for us when we tied them up months and months ago. And these projects have long due diligence and feasibility cycles, right? There's just a lot of stuff to figure out. One of the longer feasibility items is, in phase one environmental survey, and like that can take 4 to 6 weeks. Just that alone, right? Not even talking about then finding the debt and finding the capital and putting it all together and doing other inspections and floor plans and operational plan. It just takes months, right? And so unfortunately, deals that we had under contract that were good deals when we tied them up became no longer, within our investment criteria, which was painful. Of course, we try to renegotiate. Of course, we try to help sellers understand this is beyond our control. But before we could get, maybe 4.75, now we're at 6. Like, can you work with us here? You still want to sell? We still want to buy. There's something outside of our control. And so that's been very difficult, I will say, right?
Yeah. This changed. So again, I have the luxury of going through a couple of cycles like this. I guess one word of encouragement for you is this is catching very experienced people as well. Cause I have personally never seen rates move this fast, right? In about 100 days in the residential market, they doubled. And in the commercial market, they went up, I don't know, 50 or 60%. But when you're talking tens, if not hundreds of millions of dollars, an extra half a point turns a good deal into an alligator quickly, right? And as always, we don't do alligators, right? We don't lose money, right? You have that, you set an investment criteria. If it's below the line, it's below the line, right?
That's it.
And, one of the only levers you have at that point is to say, hey, cost of capital went from here to there. I still want to do the deal. Are you going to, it's called retrade in the industry, basically renegotiate, get a lower number. And I mean, you could do other things like have a seller carry back at 0 and delay. I mean, you could do other things, but the seller has to work with you. And you're not the only one. I've heard of probably 200 million bucks in deals basically explode because of this rate shock. And I think that sellers have not woken up, right? These sellers, for the last 2 years, Jan, they could name any number. And they'd have all this stupid capital running over. And they're kind of used to that. They haven't realized that the world is changing. And oh, by the way, let's be very clear. I still think bad deals are being done. The fact that you walked and likely lost money because you had expenses is amazing. I know there's some GPs, general partners, that are still closing. And that's because they get paid at management. They get paid at acquisition. They're doing bad deals, but they have no skin in the game or very little. And I think that's horrible. So it's bad. So you lost, I don't know, 40, 50 grand in expenses, I'm guessing, when this 5 million blew up?
No, not that much. Not that much. It was 2 projects and we've committed thousands, but not tens of thousands.
But still it's not 0.
No. And more than the 5 or 10 grand you lose in due diligence costs on projects like this. It's the time and the emotional investment, right? You're excited because you tied up a good deal. And then you have the dread of, holy shit, something outside of my control is turning it into what's not great
Yeah.
anymore.
I call
Right?
them alligators, but yeah, you
Yeah.
can steal my vocabulary.
I'm
But no, but so again, I want to give you some encouragement. When we first talked, right, the first 3 videos we did together, I got to tell you, I wasn't sure you would walk, right? Because this is your first rodeo through this changing market, right?
Mhm.
And I think the last video, I was like, "Ooh, this guy might be a little bit too gung ho," right? Like the world,
Yeah,
like nothing sticks to me, right? You're like that.
sure.
But the fact that you walked is very encouraging to me, because if you were to ask me the first time, I'm like, I don't know if Jan walks, because maybe he'll just try to get it and hope and pray and beat up his spreadsheet, right? Because again, you could always beat up your spreadsheet, right? I'll just raise rents 5%. It'll work out.
Yeah, yeah.
Yeah.
Well, here's the thing, right? I have thrown money and effort and time into a project and done a little bit of hoping and praying when it's my own money, right?
Exactly. Different. Yeah.
But these projects required, we were very low leverage, right? So we were 65% loan to cost on both projects
Nice.
just to make it work. And so we were going to have to raise, 35% of $5.5 million. It's a couple $1 million.
Yeah, exactly. Yeah.
It's a lot of cash. And so,
I mean, you're not writing that check yourself, Jan. Come on.
not yet.
Not yet. No, I know.
Give me a couple months, Michael. Come on.
Okay. I'll wait till December.
Right.
That's funny. But no, that's what you should do. That's what GP. And again, not all GPs are. I've seen some bad deals get closed recently.
Yeah.
Just bad.
Yeah.
And,
Well, and you got to feel for the guys that closed stuff a year ago when everyone is still feeling like this was never going to end, you know?
oh yeah, dude, if you got bridge debt a year ago that's coming due, you got IO bridge debt, value add, and now, supply chain screwed it up and you only can turn 10%, not 25. There's going to be some real pain. So what I'm going to tell you is what, I don't know if we talked about last. I see a lot of pain coming to the commercial segment because, again, I think it was Elon Musk said money was rained down on fools for 2 years, and now it's time for that money to go away. So I expect to buy some amazing commercial deals from people that get washed out, because if you have bad debt structure, that's the amazing thing. I have seen the same stupidity in the debt structure of commercial that I saw in residential in 06. That might not mean anything to you, but what did we have in 06? Short-term debt, 2-year IO, horrible assumptions, right? People were approved with a 1.9% mortgage that reset to 9. Horrible. You had terrible rent assumptions. You had terrible appreciation. Just bad. And what did we do? We just did all that same thing in commercial with tens and hundreds of millions of dollars. This stuff's going to explode.
Yeah. Yeah.
So get ready. That's what I'm telling you. Get ready.
I'm trying to be ready. I feel, here's the thing. You've been through a cycle. I haven't as a professional investor. I think I'm ready, but then when the pain hits, it feels different than conceptually what you think it's going to be, right?
Yeah. Lots of things in life the first time wasn't what you expected.
Right.
But I could tell you again, I wasn't sure you would walk in our last discussion. I'm happy, ecstatic to see, because that's not hard. You're walking away from money. You're emotionally committed. It doesn't feel good not getting it done, because you're addicted to you're not addicted to the deal. You're addicted to close it, right? And then getting on with that process.
Sure.
But I have to tell you, the deals that you will do a year from now will make the deals you walked from look horrible.
Right.
You will get in for less money. You will get in for better debt structure. The rate may be higher, but who cares? The debt structure, the stack of debt will be different. So what I got to tell you is attaboy, and double or triple your networking, because like what you just went through, the next 90 days, we're going to see a lot of deals not close because the seller hasn't figured out that the world's different. But 6, 9, 12 months from now, again, I bet a year from now, if we talk next summer, the deals that you will be closing will make the deals that you walk from look horrible. That's what I want to tell you.
And I think I'll actually be able to afford them because I didn't bring limited partners into a subpar project, and to where now they're not going to trust me anymore, right?
Oh yeah, your reputation is everything. The fact that you walked, those LPs are like, okay, great.
Yeah. And in commercial real estate especially, right? Prices have to come down because the return is effectively the spread between your cap rate and your debt rate, and currently they're like the same, or
Yeah.
or it's
Or
upside
worse.
down.
Yeah,
Right.
exactly. Yeah.
So it has to change, but it changes painful and slow. And
The
so,
real estate market is slower than everybody expects.
right.
Buyers and sellers, buyers and owners, right? They have different emotions, different memories, different. An owner always thinks their thing is special.
Mhm.
Buyers, we don't think, right? It's just another line on a spreadsheet. But yeah, I guess what I would tell you, kind of wrapping this up, is it wouldn't shock me if nothing happens for 90 days. Because sellers just it's something called price inelastic, meaning that it's very sticky. But when that breaks, it breaks fast. So I think we have 90 days, 6 months, because again, we're gonna have current sellers who were in contract go out. Those will eventually sell at lower numbers, better cap rates. They have to because of the debt. But I think the real pain, to your point earlier, is the debt that inked in. Like if you did a value add in 2020 or 2021 when cap rates are 3.5 and then they get out, you're at 6.5.
Good luck.
Hello. I mean, you do the math. I mean, I did the math with another syndicator, Jonathan Twomley, on Thursday. Very small assumption changes. You could see 33% drop in value. And oh, by the way, if you had 25% equity, what are you going to do? Have a capital call? Good luck with that.
Yeah, that's rough.
Yeah. So again, I think you did an amazing thing. I'm so happy to hear that. What else are you seeing out in the commercial market as we wrap up video one?
I mean, that's the bulk of it, honestly. It's just this weird transitionary period that I wish didn't last as long as it's lasting. You know?
It's going to last 90 more days. Just know that now.
I mean, listen, I think we're about to lead into this, but it's just made me realize how much more we need to focus on seller financing, where it's debt, debt rate independent, right? It's whatever we can negotiate with the seller. And now we don't have to wait on a credit committee. We don't have to wait on approvals. We don't have to wait on some jacked up broker price opinion or appraisal that's going to screw up the whole thing. It's like, I think now more than ever, this is a critical time to get good at seller financing.
And you have just pointed us to video number 2, seller financing. I just did a 90-minute deep dive on it yesterday. Seller financing is where it's at. People talk price. You're missing the boat. If you don't understand seller financing and how that could, I will overpay Jan with a seller finance deal. So we'll get into that in video 2. Where can people find you in the meantime?
In the meantime, find me on Facebook. Type in WAREI, WAREI, Washington Real Estate Investing. Great community. We have about 14,000 members that invest in real estate in the Pacific Northwest, but also nationally. Great engaged place to get your questions answered and connect with other like-minded investors.
Yeah. And again, congratulations on walking. I think you're going to have an amazing career, because that is very hard to do. So shout out to you.
Thank you. It was hard.